Hello everyone and welcome to day 5 of our marine cargo insurance course. Today we are diving into a really important topic, the Institute Cargo Clauses or ICC. These clauses are the heart of almost every marine cargo insurance policy, and they define exactly what is covered and what is not when your goods are in transit. We will look at the three main types A, B, C, and so you can understand the different levels of protection and choose the best one for your specific cargo and how much risk you are willing to take. So exactly what are these institute cargo clauses? They are standardized set of rules that have been created and are widely accepted by the insurance industry. They are developed by a group called Institute of London Underwriters, which is a very well-known and respected organization in the insurance world. These clauses form the backbone of most marine cargo insurance policies you'll find anywhere in the world. They provide a common language and understanding for what's covered. Their main purpose is to define the scope of coverage. This means they clearly tell you what kinds of losses or damages to your cargo are included in your policy, and just as importantly, what is especially excluded or not covered. You will often see them referred as ICC 1182. This simply means they are the versions published on January 1, 1982, and these are the most commonly used ones globally. So when you look at a policy, you will likely see a reference to these specific clauses. First up, we have the Institute Cargo Clause A. This is often called all risk coverage, and it offers the broadest protection for your cargo. Its scope means it covers all risk of loss or damage. This sounds like it covers absolutely everything, right? Well, not quite. The interpretation of all risk means it covers all fortuitous losses, things that happen by chance or are unforeseen, unless the policy specially lists them as an exclusion. So, if the policy does not say it's not covered, then it is covered. However, there are some common exclusions you need to be aware of. These include things like if you intentionally cause the damage, normal wear and tear, or if the goods naturally spoil or deteriorate, what we call inherent rights. It also excludes losses due to insufficient packing or losses caused by purely by delays. Importantly, it also excludes risks like war, strikes, and civil unrest. These usually need separate additional insurance. This A clause is best for high value goods, very sensitive or fragile cargo, or anytime you want the most comprehensive protection available for your shipment. Next, we have Institute Cargo Clause B, which offers a medium level of coverage. This is a named peril policy. Its scope means it only covers losses that are caused by dangers that are specifically listed in the policy. If a danger is not on that list, then any loss it causes is simply not covered. Some of the covered perils include things like fire or explosion. If the ship runs aground, sinks or flips over, or if the truck or train carrying your goods overturns. It also covers collision, cargo being unloaded at an emergency port, natural disasters like earthquakes, or even if the cargo is intentionally thrown overboard to save the ship. That's called jettison. It also covers water getting into the container or if a whole package falls overboard during loading. However, the exclusions here are broader than ICCA. For example, this clause generally does not cover theft, petty theft, pilferage, or if any entire package simply goes missing, that is non-delivery, unless these things happen because of one of the specific named perils. This B clause is the best for general cargo where you need a decent level of protection but perhaps don't need the absolute broadest all risk coverage, offering a good balance between the cost and what's covered. Finally, we have the Institute Cargo Clause C. This is the most basic and most restricted level of coverage. Its scope is quite narrow. It only covers a very small number of specifically named perils. These covered perils include fire or explosion, if the ship runs aground, sinks, or capsizes, if the truck or train overturns, collisions, cargo being unloaded at an emergency port and jettison. These inclusions, the exclusions for this clause are very broad. This means it leaves out many of the dangers that are covered by ICCB and almost all risk coverage from ICCA. This C clause is best for low value goods, bulk items like raw materials, or when keeping the insurance cost as low as possible if your main priority and you are comfortable taking on more risk for other types of damages. So to summarize, here is a quick comparison table of ICC A, B and C. Looking at the coverage scope, A is the broadest, covering all risk unless excluded. B covers specific named perils and C covers a very limited set of named perils. For theft, pilferage or non-delivery, A generally covers these. B does not cover them unless they happen because of one of the specific listed perils, and C does not cover them at all. For water damages like from rain or sea water entering the container, A generally covers it. B covers it if the water enters due to the specific event like a hole in the vessel, and C does not cover it. For natural disasters like earthquakes or lightning, A generally covers them. B covers them, but C does not. And finally, the cost of the premium. A is the highest because it covers the most coverage, B is medium, and C is the lowest because it offers the least. So that concludes our deep dive into the Institute cargo clauses. This is a critical decision point for anyone shipping goods. Now I'd love to hear your thoughts. If you were responsible for shipping a consignment to delicate electronics, which of these ICC clauses, A, B, or C, would you choose and why? Please share your reasoning in the comments below. Thank you so much.